Welcome to the 10 Mil Club Standard Portfolio meeting for the fourth week of April going into May 2026.
From the South Carolina Low Country,
It's the 10 Mil Club. It's the 10 Mil Club.
First off, a couple of housekeeping items. We may or may not own the stocks that are mentioned here. We'll try to tell you when we do and when we don't, and we're looking at them, but that situation could change at any moment. Nothing in this video is financial advice. Do not trade solely on this. Securities that we present here may or may not be suitable for you. You will actually have your own ability to and willingness to bear risk. And any valuations you see us do in any of our videos do not comply with any of the standards and ethics of any of the organizations to which I am beholden, because I actually am a business valuer professionally. But what is the 10 Mil Club? The 10 Mil Club is an informal group of people that believe that if we could get to $10 million worth of net wealth, we would no longer have to do what other people financially make us do, and we could kind of call our own shots. So if you are somebody who believes that that is the case, you're in the 10 Mil Club, and we welcome you. So about the portfolio this week, let's get to it.
10 Mil Club.
We still own TJ Maxx. Now, just a real quick pointer here, if I might. Earlier in this week, we bought some things. We, of course, held some things. And then as we got toward the midpoint of the week, it was like the market shifted under our feet. We got stopped out of a couple of things. It was kind of a difficult situation. I did a bit of soul searching, but so it is. That's why we have stops and things. So just kind of a tidbit there. We still own TJ Maxx. This is a year of TJ Maxx. We're up 3.55%. At times we've been up more. I don't expect TJ Maxx to crash harder out of this down that it has. Let me go to 6 months here. If anything, this looks like an entry point to TJ Maxx. So no real worries there. We, of course, own ROST stores as well. And we are up 0.16% on ROST, R-O-S-T. So look, it's a long slog as we see it, and if this trend continues, we're just fine. Stops down here at what is that, 215.12, which was calculated based on our entry price at 226. We took a stop at that area, so we're fine. Fox, which is Fox Corporation, we are still looking at an uptrend here, but like I said, later in the week we just had this back off of the market. I couldn't really figure out what it was. I'm just going to be honest. The only thing I could come up with was that the blockading of the Strait of Hormuz kept changing. One minute everybody was blockading it. The next minute it seemed like nobody was blockading it. Then one was, then the other one wasn't. And the blockade of the Strait of Hormuz kept changing. That's all I could come up with, was that Iran, if I remember correctly, announced that they were not going to blockade the Strait anymore, and the United States said, that's okay, we're going to blockade it anyway. And from then, the whole market did this kind of thing, it felt like. So anyway, we still own Fox. We're still up 5.79% on it. We got a little bit of a run up here. It's not as far as we here at the TMC think it's going to go. This is a year of Fox. We bought it down at this strategic area right here with a 1-year uptrend in place. So Fox we're keeping. CARG Gurus. This is a year of CARG Gurus. We bought it in this run up here and held it with our stop. We've moved the stop up. So our stop now is below this uptrend line. Go to 6 months again. We're below this uptrend line on the stop right there at, I believe it's 32.10 is, I believe, where we are on the stop now for CARG. There's a lot of good momentum for this. It's being kind of rewritten as we go. It has AI, and they're using that for selling used cars. And my main concern is that as it's going up, we don't have the volume confirmation that I'd really like to have, but the price is still moving up. So far, we're okay, so we're holding on. Right now, up about 17.25%. We bought, since our last 10 Mil Club meeting, we bought Stephen Madden, or SHOO. And this is 6 months. You can see how it appears to be a downtrend on the 6 months, but on the 1 year, we have a good-looking uptrend like this and a strategic turn right here, which is why we bought it in this area. And then just the late events of last week, the way the market eased off like that, I don't know, could get stopped out, I suppose. Did on enough things that it's going to come up in just a minute, and you're going to have a good time either laughing at or with me. I don't know which. But that SHOO, we own that and are down 2.97%. This is a penny stock that I really should get the TMC staff to help me put together a penny stock spotlight on. Vera Bradley, VRA. Vera Bradley is working, they have some new leadership in place, and they're working real hard to turn their brand around. Again, you can see the events of late in the week. We bought ours at 417. If this does what I think it will do, we should have, this being a higher high, we should probably have a higher low somewhere right through here. But Vera Bradley, a lot of potential upside. Taking losses right now, but things are improving there. We are down 5.5%. We're above the stop. Stop's down here at 360. So stock closed at 394, 360. All right. We sold the Coupang CPNG, and we did it at a strategic spot. Let me go to a 6 month here. The every now and then I get it right, and I feel good about myself. We sold the Coupang right as the rug was being pulled out from under the market, just after midweek, and we took 21.27, canceled the stop, of course, and said, all right, let me know if it goes back across that line. I expect it will. As long as this isn't just a turn right here and it never does make it back to the line. Because sometimes if you have accumulation, you will get that. And I'll be paying attention to it and talking to the staff around here about it. But we here at the TMC figured that it was probably best to sell it right up here because this was a new high. So far we're okay. We sold it at 21.27 and the stock closed at 20.51. We're kind of waiting for it to cross this line again. We think there's a lot of upside in Coupang. It has a very good fundamental scan, so we like it a lot. This was an interesting piece that happened this week. I'm going to have to go, all right, that's 6 months of HCSG, or Healthcare Services Group. Healthcare Services Group, if you look at a year of it, you know, uptrend. I like it, right? Here's the channel. That red one's my overlay channel. The salmon colored one is the mathematical channel. I just lay on top of everything. And if you look at it, so this is 1 month, 1 hour here. And I know that looks awful confusing. Hopefully you can see the stock go along like this, and then all of a sudden we hit earnings. We bought that thing at 1917 a couple of days before its earnings. We're not usually here at the TMC in the business of buying stuff going right into earnings, but the vibe felt good, and you know, sometimes you just have to take a chance in life because you only live so long. And the earnings were very good, and it just rocketed up. So here we are. We'll just go with something really small, like 5 days. We're going with 5 days, so stock's long. And here we bought it just before just before the end of the screen, and then earnings, pow, it went up. And so it went up, it retraced, and then it came up again, and we just finally sold it right up in here. So we bought it at 1917, sold it at 23.16. It was more than 20% in just a couple of days. If you want to run the annualized return on that. It's some stratospheric number that's almost embarrassing to say out loud. But that was the good thing that happened this week. Other things that happened this week, FUBO. We actually took a flyer on FUBO. And the reason we did that, this is 1 month, 1 hour of FUBO. And FUBO goes down and it turns. Now, I'm well aware. If you hang on Dave Keller's every word as I do, you'll know that FUBO doesn't have what looks to be a good chart. This was a flyer. So like, here's 1 year, 1 day of FUBO. You know, the reverse merger's back over here. Like toward the end of the year, the market's already jittery about it, and then it just goes down, 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 down. And these are fake numbers because it was actually a penny stock down in here. It was like $1.15, $1.17 a share, something like that. And then they reverse split it, and then it, from a technical standpoint, dove again. Well, I get it. Here's 1 month, 1 hour. It turned down here. There was a lot of talk and chatter about it. If you've been on our channel, you know that we've talked endlessly about FUBO and put out multiple videos only talking about FUBO, penny stock spotlights and follow-ups and things like that. We kind of looked at it and we went, you know what? We're getting higher highs and higher lows. Time to buy it. We bought it at that strategic spot right there, and then the rug got pulled out from under us. And if I'm being perfectly honest, we bought it. The rug got pulled right out from under us. We were down about 1.5% when Laura Sue looked at me and said, should we sell it because it's not doing the right thing? And I said, no, I think we need to give it a little more give. And sure enough, I can't remember if it was later that day or the following day, but FUBO stopped us out and we lost the full stop amount. So that happens sometimes, and that's why we have stops. It didn't stop after that even. Our stop was 12:30. It's now at 12:01. It's been in the 11s. So maybe a little while before I take another flyer on FUBO. Every now and then I get a little brave, and that's just kind of the way it worked out. So maybe a little while before we take another flyer on FUBO. We also bought KRMN this week. Early in the week, we paid $82.50 for KRMN, right at that line. And this one surprised me. KRMN's a space and defense company. And I kind of thought, well, that's a strategic spot. Should turn right around in here. If nothing else, we should ride the line like this until the next run up. And I would, if any of you out there are more experienced traders than me, which would not be difficult, I have plenty of letters after my name and plenty of experience valuing things, and a bit of trading experience too, and have read lots of books. But the truth of the matter is, there are people out there who've been doing trading for 30 years, and I bought it right here at this spot, and just all I could come up with. I did a lot of walking through the neighborhood and soul searching after this. All I can come up with is that the rug just got pulled out from under the market and it stopped me out. Now, I could have sold it earlier, but I didn't do that. So if I had listened to the staff here at the 10 Mil Club, we'd have been in better shape. But, I didn't do that, and quite often they defer to me. And I like that and don't like it both. So there you have that. Moving on, Verizon is one that we have not bought lately. We had a successful trade on it in the past. It seems to be in an accumulation phase still, and it came down and started forming this spot right here. Now, we'll be looking at that this week. So VZ, looking at AFRM. This is one that in our last 10 Mil Club weekend meeting we said we were going to take a look at. I kept this on here because this was an example of a type 2 error where we lost an opportunity. I said, let's look at that, and then got busy and then didn't pay attention to it and could have picked up easily quite a bit. Looks like about maybe 10 to 12%. Now you can totally see the rug pull at the end of the week, the market there. I'm still watching it in case it recedes to this area back down here, because I think that this 1 year. Well, no, it's 1 year. Okay. Well, okay, all right. I'm not right all the time. We now, because of this, we now have a 1-year downtrend. So I don't know. I'll come back with some more thoughts on AFRM. All right. Armstrong World Industries, AWI. This is the Armstrong World Industries that makes housing and construction products. Seems to have good upward momentum and didn't really suffer from the end of the week. So that one, if you are a proponent or an adherent to Mark Minervini and his teachings in his books, he'll say that a lot of times when the market goes down, if you can find things that went up and were more resilient, they'll be your better performers in the future. And I agree with that. So we'll be paying some attention to AWI because it did not suffer at the end of the week as much as others did. Mueller Water has found support again here, MWA, at the midline of its uptrend. This is 1 year. We'll be looking at this week. Rollins, ROL, this is a pest control company based out of, I believe, Atlanta. Let me make sure. Yep, based out of Atlanta. Wildlife Services and Pest Control. This sell-off, I really could not find out why that sell-off really happened, and neither could the market. And so we get this rebound here. So I'm kind of looking for somewhat of an entry spot into Rollins because I think there's some pretty good upside in that stock. So ROL we'll be looking at. CMC is Commercial Metals Company. They're both a recycler and a producer of metals and steel and that kind of stuff. There's the downtrend sell-off, and here's the I don't know what happened recovery, and so we will be looking for an entry spot into CMC soon. I like YETI, YETI. We haven't owned this ever, I don't think, here at TMC, but YETI actually has a really great fundamental scan. I would show it to you, but it really does. Interestingly, it's consumer discretionary, and the consumer discretionary sector really hasn't been doing very well, understandably, with consumer confidence kind of in the tank, and the job market being a low fire job market, and there being problems bubbling under the surface of the economy that really are there. We all know they're there, but aren't really showing up in the numbers. But for some reason, YETI is just a resilient company, and so their stock, despite this sell-off here, looks good. This is a 1-year uptrend. We'll be looking at YETI this week. EXPD, Expeditors, they have to do with the trucking industry. I think they basically book loads and things. Let me for logistics services, air freight, freight consolidation, ocean freight, ocean services, cargo insurance. Actually, it doesn't look like they're trucking as much as air freight and ocean cargo. They actually made a statement. This is kind of the AI sell-off when the world was like, oh no, AI is going to destroy everything. And they said, that's really foolish because we've been using AI for a long time and it's actually increasing our profits. And zzz, here they came. So we now have higher lows and higher highs. So we're probably looking at EXPD in this coming week. Lose, I hope I'm pronouncing that right. L is the symbol. Lose, this is 1 year. Lose is actually a conglomerate. They have hotels, but they have several different things, and I never can remember what they are. Risk management, services, surety and fidelity bonds, personal liability, casualty insurance. They also have some hotels. They also manufacture commodities and differentiated plastic resins and stuff like that. So, yeah. This is one that will this kind of has the TJ Maxx look to it. I like it. It also has a very good fundamental scan. So L lose we'll be looking at over the next week. Dollar General, if you go back and you take Dollar General over 5 years, Dollar General was really high. It came down, 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 and then crossed that line right there in April of 2025. And from that moment to this has been in a recovery. And it makes sense because if you pull up Dollar General's fundamental scan and take a look at it, Dollar General really never stopped making money. The market just kind of turned on its stock there for a little while, which, I mean, sometimes happens. The market figures that a stock gets a bit overbought, and you have to have stops in place in order to not take those kind of losses. But right now we're kind of at an entry point here. That is a lower low to that low, so I'm a little bit more careful with it, but I think what we're going to do is we're going to look for an entry into Dollar General sometime soon. And then the last one we're looking at is BorgWarner, BWA. BorgWarner, if I'm being perfectly honest, the one thing I don't like about BorgWarner is a couple of years ago here at the TMC, we did own a set of shares of BorgWarner. Actually did pretty well, traded them. One of the effective trades we really did do, made some money off of them. BorgWarner is the part company that makes parts for cars. Their management has really jumped on the electric vehicle trend, and I do understand that we're going to have more and more electric vehicles. I myself don't own one, if that tells you anything about me. I don't even own a hybrid. But I know we're going to have more and more electric vehicles, but they went so hard into, we're going to eschew everything we have that's gas powered, and everything we're going to make is going to be electric vehicles, that their business portfolio of products kind of began to bother me. So, but that doesn't change the fact that there are apparently a lot of market participants watching this stock. And then it sold off, but it resumed right along the 50-day moving average. So we will probably be looking for an entry into BorgWarner sometime soon. That is everything here at the 10 Mil Club that we're looking at. Let me share one whimsical thing with you before we go, though. Just for fun, because we are the TMC, we've gotten a comment or two about how we should be following TMC stock, the metals company. We'll probably do a penny stock spotlight on this stock just because we are the TMC and it's the TMC. This is a zero revenue rare earths and critical minerals company that has a plan to mine rare earth metals and critical minerals off of a spot of the Pacific Ocean floor southwest of San Diego, California. I think, if I remember correctly, it's like 1,200 miles southwest. It's way out in the Pacific Ocean. But there's an area out there, and they're waiting for their license to do so. There is absolutely no way to value this stock. It simply is what the capital flows say it is. There's no revenue. We don't know when exactly it's going to come online. It does have an upward trend. You can see it here with the 1-year upward trend. The 6-month trend is not nearly so rosy. You have a downward trend, but it just depends on how you look at it. At the moment, it has crossed this line and gone on up. We have had more queries on our YouTube channel to see if we cover TMC. So because we are the 10 Mil Club, we're going to cover TMC stock just for fun, because who knows? Maybe it'll end up being the next big thing, and we want to say a few things about it. That is what we think about it. Thanks so much for joining us. For Laura Sue, Will, and Mark Thomas, who engineer, produce, and basically keep things organized around here at the 10 Mil Club, and especially to the 10 Mil Club singers, Sophie, Hannah, and Presley, and Jackson, our announcer. We will see you next time on the
10 Mil